I'm Shay Russell for mining.com.au, and joining me on camera today is Sean Russo, one of the principals for Noah's Rule. Sean, how are you today, mate?
Very well, Shay. Very well. Nice to see you.
Now, it's fantastic to have you back on solid ground after your adventures across the bottom of the world, but I believe we will next be seeing each other at Sydney's RIU Resources Round-Up next week, running from the 7th to the 9th of May. Tell me, what takes you to this event?
Well, I've been going to this event. Noah's Rule is in its 20th year this year, and I think every year that we were just delighted. We always had to get on a plane and go to Perth to go to a conference, or go to Brisbane to go to a conference. And the fact there's a conference in Sydney, and all the people that we like and our clients and other people come to Sydney and spend 3 days is great. I mean, to go to a conference and sleep in your own bed every night is an absolute luxury. So I love the conference in Sydney. And then in 2013, I'd got to know the organisers reasonably well. And someone who had the last spot of the day on the last day, 2013, you remember a lot of gold mining companies were having a few problems. You might remember the gold price had fallen a
A
little
little
bit.
bit.
And they said, "Oh, sorry, we can't come, fighting a few fires over here in Perth." And Jackson came up and said to me, "Sean, would you like to take the last slot of the day? Could you do something?" And I said, "You want to give me the last word? You're asking you need to ask me that." So yeah, so for the last 13 years, either myself or when I've been away, my colleague Dave Rowe, the other principal of Noah's, we've done the closing presentation at this conference. So yeah, it's fun. I really enjoy it. It's a great conference.
It is actually an astounding conference, and I think it's one of those rare industry to industry events that investors get a sneak peek behind the curtain of how the
Yeah,
industry operates. So I couldn't speak highly enough of the RIU, but I do want to give everybody a little tidbit into what you'll be talking about. Now, Noah's Rule, it doesn't give it away in the headline. You are actually a passionate advocate for gold and helping companies, mining companies in particular, hedge their exposure to gold. So, could you give everybody a little bit of a sneak peek about what you will be closing out the RIU with this year?
sure. Well, I think some people find it difficult to reconcile between the rather positive view I've had on the gold price the last few years as I've presented it at RIU and other conferences, and the fact that we help gold mining companies hedge, which many gold investors don't like the idea that gold producers lock in gold and then later, with hindsight, say that's wrong. I think that they're totally acceptable things to hold, in the sense that if you're talking to investors about gold, you're talking about risk management. That's what Noah's Rule do. We do risk management. So if you're an investor and you get paid paper, you get paid in fiat currency. You're in the normal financial system. You need insurance. Owning gold is a great form of insurance, and certainly in the medium to long term. But if you're a gold miner and you get paid in gold, but you pay all your bills in currency, it's not a bad idea to have a modest level locked in the other way. Because the one thing I know is I have no idea what happens tomorrow, next week, in the future. The most dangerous person in the room in any investing conversation is the person who's absolutely convinced they know what happens next. They're the most dangerous people, right? But in the long run, I think we have a reasonable idea that we know what central banks are going to do. They're going to inflate or die, right? I mean, they're going to have to keep printing money to match their promises. And politicians never got voted in on anything that was about discipline or financial sort of sensibility, right? So I absolutely comfortable to have the idea of owning shares in a gold mining company that hedges, because in the long run, if the gold price goes up a long way, I'll make a lot of money out of that company. But if there's a hiccup in the gold price like there was in 13, after probably 2 of the years where more people lectured me about why gold price was going to 2,500 and it was at 1,800 in 11 and 12, never met more bullish people in my life after the gold price had run from 400 to 1,800. Couldn't find a bull in the room at 450, in 2001, but the room was full of them in 11, 12. And we were sort of saying then, well, maybe it's a little bit over its skis. Maybe you want to have more hedging. And the really successful gold mining companies in Australia that still exist today, Evolution, Perseus, two very good examples, both were hedged into 13, and really that preserved their capital structure and allowed them then to get through that period. So I can hold both those views without any problem in my head. But coming back to what we're talking about specifically on Thursday next week, I'm following up on my previous presentation last year. Last year, I gave a presentation called Stacks on the Mill, that was a pretty bullish version on why I thought the gold market was set to take out the historic highs and move forward. And I identified two previous periods in history that look very similar to me. One was in the late 70s, one was in 2007. And in both those cases, gold then moved quite a bit higher. So we said we'd sort of hit the first hurdle and we were going through, but we needed people outside the room at the RIU to get involved. Like, you go to a mining conference, you're talking to the converted. I think I said in the conference last year, when all these English people turn up with Hermes ties and ridiculous accents, and there's a whole lot of New Yorkers with sleeveless vests and penny loafers on, you'll know it's time to get out, because when all the foreigners come to Australia, turn up at diggers and dealers, like, that's the end of the boom. We're just at the start. So the true believers were in the room. We needed stacks on the mill. 8 weeks ago, 12 weeks ago, Andrea from RIU calls up and said, "What's your title of your presentation this year?" And I went, "God, I don't know. Why are we waiting? We're waiting. 10 months later, we still haven't got that move in the gold price." Well, of course, since I gave that title, it's gone, right? So we didn't have to wait much longer. Before we got on the call, you talked about telling people that you want to be in the gold because you never, you know it's going to go, but you don't know when. And it's that kind of time in the market versus market timing.
Yes.
This last 8 weeks is the classic example of that. If you weren't already long gold waiting for this to happen, it jumps so quickly. Well, I'll just wait for a dip. I'll just wait for a dip. Well, you finally got a dip now, but the market in Aussie dollar terms is already up. Went up $600, and now we've had the first dip come back a little way. So that stacks on the mill kind of thesis has now played out, and so I'm talking about where we are next, what happens next from here. And in particular, I want to talk about the issue of how I'm quite surprised at how many people whose views I really respect, and gold analysts I know, and people I've met over the years, who are very suspicious of the most recent rally. Because the most recent rally doesn't fit their framework. Gold has rallied in the face of a stronger US dollar. Gold has rallied even though the equity markets are still quite strong. Gold has, decoupled with real rates. And that's probably the chart that has the most airplay on Twitter. Gold going one way, real rates going the other. I've been in the gold market for 40 years this year, and I can tell you, 20 years, no one talked about the linkage between gold and real rates. I mean, there was a period of time where there was no linkage, so no one talked about it. People like to attach to whatever's happening at the moment, And so, yes, that might have broken down, but maybe that means that rates are wrong, not gold. And so all of that is to say is that you just got to look at the price and go, well, it doesn't fit your framework, but the price is here. Maybe it's someone else's framework. And I think people in the West are still far too casual that central banks are in control of things. And so you've got falling ETF volumes and falling sophisticated investors who manage money for lots of Western people's pension funds getting out of gold and getting into artificial intelligence or whatever. But in other parts of the world, people just see the world kind of melting down. The kind of inflation they're experiencing in Ghana at the moment, or Egypt, or places in South America, those people, there's a natural reason why they would want to buy gold. And I mean, I think I said to you before, that's also, I think I was ignorant, or I ignored Bitcoin in the sense of being a person in the West and going, yeah, okay, whatever, you young people, you have a go at that, but I'll stick with my gold. But as I look around the world and what's happening, I increasingly see why there is a use case for Bitcoin in a lot of, not the ETFs so much in New York, but in these emerging markets. Yeah, at least they've got something that's going up in value as opposed to the other forms of things. So gold, I think, has broken out. It might take time to digest this rally. It's a pretty fierce rally in a short period of time, but it's broken out. And the one thing it hasn't done yet is it hasn't really broken out against equities. You and I chatted before about the Dow Gold ratio. I'm a great fan of the Dow Gold ratio. That's now been around 16 to 18 for about 7 years. So you will not read in the mainstream media that gold has been as good an investment as broad equities for the last 7 years. You never hear that. You hear about, equity, how good the equity markets have been. And interestingly, the Nikkei is all the rage at the moment. The Nikkei is finally broken out and it's beaten its 1989 high. Against gold, the Nikkei is flat. Right.
Mm.
So that's the thing. So gold's been keeping up with all these equities. And what's that mean? It means that those equity markets are actually reflecting the weakness in the currency. The Nikkei is only going up because the yen is going down. In US dollar terms, the Nikkei is not very interesting. So I think that's the shoe that I'm hoping as a, that is going to drop, is that we're going to start to see the Dow Gold ratio drop below 16. And people can easily do that once a week. Just Friday night close of the Dow Jones divided by the gold price. There's your ratio. Below 16, that will start to make a lot of general equity investors very nervous, I think, and want to seek some comfort in gold. The one warning that I would make about that, Shay, is the last time that we broke down through 16 was in around 2007, 2008, and it got as low as 5. And gold, outperformed general equities by a factor of 8-1 from early 2000 to 2011. But at that one particular time, around the time of the GFC, the ratio went from 16 to 8, and that was because the Dow halved. The gold price just remained unchanged. So the ratio falling doesn't necessarily mean gold's going to go up. But hey, I'd rather have gold that's still at the same value it was a year ago than equities that have halved, and trying to explain that to my wife. So, or anybody. So, so that's, I think, that's the shoe that hasn't dropped yet. And that's where the stacks on the mill will still really come. When gold market's tiny, in the scheme of the global financial markets, the gold market is tiny. The Eastern investors are way ahead of us. They've accumulated, they're long of it. The West has been selling out of it. I think you'd be familiar even recently, Perth Mint sales are way down, despite the Costco story in the US, which is fantastic. Mint sales are down. Maybe mint sales in the US are down because it's all getting sold at Costco. I don't know, but I thought Costco was where was just the other place along with Walmart where Americans bought everything that was cheap and from China. So at least they're reversing that trend by selling gold. But so West's still not involved. The West is still not involved. They're still hanging on to AI and hanging on to all these other things. Commodities unloved. Great setup.
Listen, Sean, I couldn't agree with you more. And the only thing I hate about our conversations is that there's never enough time to pull on all of the threads that you mentioned in these excellent answers that you give. Listen, I'm going to have to give you back your afternoon because we do need to get ready for the RIU coming up. Sean, it was an absolute pleasure to have you, and I can't wait to catch up and hopefully have a champagne with you in person.
Yeah, no, I look forward to sharing a drink. That'd be great, and look forward to meeting people at the conference. It's always good fun. I have lots of people who come up and say hello who have enjoyed my presentations over the years, so it's great. So I'm really looking forward to it. 3 days, and as I said, sleeping in my own bed every night and getting out to a conference. Can't wait.
Sean, it's been an absolute pleasure. I look forward to seeing you soon.
Thanks, Shai.